Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the what day are we? We're in Monday, the 22nd of September. Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome everyone. We're going to go for our usual Monday run through here today, where we'll take a slightly bigger look at the shape of the week, what we've had, what we've got coming up, what were the main macroeconomic, fundamental, geopolitical movers and markets last week, and what do we have coming up for the week ahead. We do this at trade day, even though we're day trading at trade day, because it gives you an idea of where potential volatility points might be further out in the week. It also might affect them how volatile or not markets may be right now, today. So we're going to take a look at our weekly summary and macro matters. So we have our macro matters report here, usually a 3 or 4 page document looking back at last week and what we've got coming up to give you an understanding of all those fundamental macroeconomic geopolitical events that are shaping markets. And this is the summary, a 1 page summary of pretty much that macro matters document. So let's just run through what happened last week. So markets at yet again new record highs. We were nudging up towards and have been pushing to new record highs pretty much throughout September, having crept up as well throughout August, but been moving higher. Last week we made significant new record highs right the way across the board. Nasdaq up 2.2%, leading the way. Tech growth stocks leading the way. It's because Fed went for their and first rate cut of the year, as anticipated, indicating in their dot plot chart as well. 2 more rate cuts coming this year, and the Fed only indicating maybe 1-2 rate cuts next year. Market pricing in more than that for next year. But the market enjoyed that. The market liked that dovish tone, even though inflation is still running a little warmer than the Fed would like. They're focused more on the potential impact on the jobs market and the turn down in the economy. So that's seen as a positive for the market. Stock markets like lower interest rates. Growth stocks particularly like lower interest rates, particularly because growth stocks are valued on their potential future growth, the discounted fair value. So then you get the interest rate comes into the discounted fair value. So growth stocks tend to do better as interest rates are falling, long-term interest rates are falling. The other thing that helped growth stocks, and in particular the tech sector, was in semiconductors. Nvidia invested in Intel to the tune of $5 billion, and that broadly lifted semiconductor stocks, tech stocks, and growth stocks. Focus going into this week is going to be on the global flash PMI data that we have coming up on Tuesday, and then the US PCE inflation reports. Global flash PMI beginning of this week. We get them out from this evening in Asia, US time this evening in Asia, so into Tuesday in Asia, and then running right through the US session on Tuesday. And then we have the other significant report. We do get GDP, US GDP, durable goods on Thursday, but more importantly, it's going to be the month-on-month, year-on-year PCE, personal consumption expenditure. Remember, that's an inflation report. It's the Fed's preferred inflation measure in here, as it says here. Friday, Fed's preferred inflation gauge. So we're going to be keeping an eye on that. If that starts to come low, it's going to obviously be more chance for the Fed to pivot potentially even more dovish. As you can see, really not too much to interest us today. PBOC, People's Bank of China, in here, interest rate decision today, and that's already been and gone. And then EU consumer confidence today. So markets very much focused on this week. Global flash PMI data, and then the US PC on Tuesday, and the US PCE data on Friday. And Fed speakers along the way as ever. So you look into today in here, nothing of real note, nothing at all in here out of the US FOMC members. Williams is speaking at 9:45 Eastern today, so maybe keep an eye on that. Let's go to the morning briefing Americas out of Bloomberg. The main event, geopolitical event in here over the weekend was the visa change from Trump in here to curtail H-1B visas in here, $100,000 fee for those. And that's having an impact in here as shown Chaos and confusion as companies raise towards affected employees against foreign travel while second guess the wider ramifications. So that's the main thing. Some confusion on that. However, not really impacting markets too negatively in here. Stocks kick off the week lower. Gold goes higher, actually, as a risk off event to smaller days. So you've got gold at an all time high. And you've also got stocks in here sitting at or around, just pulling back from all-time highs. But the main reason gold going higher is in here because remember, gold is quoted in dollars, and the dollar's weak, generally weak. Although the dollar did get a rebound, the dollar generally weak as interest rates, particularly after the Fed. Although we did get a turnaround, so we actually spiked to a new multi-year low on the US dollar index. So a weak dollar is positive for gold. There's an inverse relationship between the US dollar and the price of gold because gold is quoted in dollars. So gold made a new record high in here, but only slightly down. US futures look inch lower after rally. Markets await clarity on Trump visa policy. That's what's causing us to dip. And again, you look higher price to pay, and that's again talking about these visas. $100,000 for new H-1B worker visas. So having a slight negative effect, but it is slight. Look, European stocks dip after Trump visa crackdown. Again, in here, rate outlook in focus. So European exchanges lower. And we actually saw the Nikkei actually up 1% overnight in here, but the Hang Seng down 0.75%. When we go to Europe, UK FTSE's little changed, but European exchanges are lower, down 0.6 on the DAX, and about 0.33% on the French CAC. And the US futures in here this morning slightly lower as well, about 0.33% for both the S&P and the NASDAQ, having had a strong end to last week. If we go turn our attention to the interest rate markets very much pricing in rate cuts for the end of the year, for the late October and early-ish to mid-December meetings. So we're looking for, there's a 92% chance pretty much of a rate cut, another rate cut at the October meeting, and then an 80%, over 80% chance we get another rate cut. So 2 rate cuts by the end of the year is what the market is pricing in. Yields continue to tick higher at the end of last week, though the longer end yields in here, despite interest rates, expectations of further rate cuts, yields actually ticking higher in here, but not really significantly impacting negatively on stock indices. And if we look in here, we've actually turned bearish across the board in here. So lower prices, higher yields, with support levels being given up in here post the Fed last week. So bonds are actually pointing to higher yields in here, but growth stocks continue to fare well because they've just got their eyes on the short-term interest rate moves. If you go to the indices, still looking strong despite the little dip we had this morning. Again, new all-time highs. Markets pretty much closing on those new all-time highs at the end of last week, and we're looking for further gains in here going into this week. So despite the dip, I'm still looking to be by the dips in here at the moment, and markets looking robust going into the day. As I say, just switching back to the calendar here, nothing really in here for today. We do get FOMC member Williams speaking at 9:45 today, and the real focus is going to be tomorrow on the global flash PMI data, and then, as I say, later in the week, the US PCE data on Friday. I'm going to wish you all guys all a great trading week and a great trading day today. Take care, stay safe, and we'll be back with you tomorrow with another Bull versus Bear webinar. Bye.